The 1-inch token has been through a roller coaster since its launch, bouncing along with the broader DeFi market's ups and downs. As we move into 2026, the question on many investors' minds is whether the token can bounce back. The 1-inch token powers the 1-inch network, a DEX aggregator that helps users find the best swap rates across multiple liquidity pools. This service has positioned it as a key player in the DeFi ecosystem. But despite solving a real problem in fragmented liquidity, the token has struggled with price pressure from broader market conditions, increased competition, and regulatory uncertainty. Looking ahead, the token's future depends on several factors. One is the ongoing maturation of the DeFi market. Total value locked has stabilized, and institutional interest is growing, but the sector is still far from mass adoption. If DeFi continues to evolve and gain traction, that could benefit 1inch by increasing its utility and usage. The 1inch network has also been working on protocol upgrades to improve efficiency and user experience. These upgrades could help the platform maintain or even expand its market share in the DEX aggregation space. If successful, they could drive more volume through the network, potentially increasing demand for the 1inch token. Another key factor is most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Regulatory clarity. The DeFi space has been caught in a gray area for years, with governments and regulators still figuring out how to approach decentralized protocols. If 2026-2030 sees clearer guidelines or favorable policies for DeFi protocols, that could remove a major overhang for tokens like 1inch. On the other hand, if regulators take a harder stance, it could introduce new risks and volatility. Token utility is another area to watch. The 1inch token is used for governance, staking, and fee discounts, but its role could expand if the network introduces new use cases or partnerships. More utility could mean more demand for the token, which could help support its price. However, competition remains fierce in the DEX aggregation space. Other protocols are constantly improving their offerings, and if 1inch network fails to keep up, it could lose market share. This would likely impact the token's value, as lower usage could reduce demand. The token's price is also influenced by broader market sentiment. If the crypto market as a whole experiences a bull run, that could lift 1inch along with other DeFi tokens. But if the market remains in a bearish phase, the token may struggle to gain traction, regardless of its fundamentals. One thing that stands out is the token's resilience. Despite market downturns, the 1inch network has maintained a solid position in DeFi, processing billions in trading volume. This suggests the platform has staying power, but it doesn't guarantee price recovery. The next signal to watch is whether the DeFi sector can achieve meaningful adoption and regulatory stability. If DeFi becomes a mainstream financial tool and protocols like 1inch network are recognized as essential infrastructure, that could provide a strong tailwind for the token. Investors should also monitor the network's protocol upgrades and any new partnerships or integrations that could boost usage. Until then, the future of 1inch remains uncertain, but most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The potential is there if the right conditions align. The stakes are high for 1inch as it navigates the evolving DeFi landscape. The token's ability to adapt and innovate will be crucial in determining its long-term success. If the network can continue to enhance its platform and expand its utility, it could position itself as a leader in the DEX aggregation space. However, if it fails to keep pace with competitors or faces regulatory headwinds, it may struggle to maintain relevance. The next few years will be critical in shaping the token's trajectory, and investors will be watching closely for signs of progress or setbacks.